Imagine waking up to see fresh cash deposited into your brokerage account. Money earned while you were sound asleep. No overtime, no early alarms, no side hustles. Just pure, effortless income. This is not a fantasy for daydreaming investors. It's the reality offered by well-constructed dividend-paying ETFs, like the Schwab U.S. Dividend Equity ETF, SCHD. The concept of passive income has become the holy grail of personal finance. In an age where financial freedom and time autonomy are prized above all, passive income represents the doorway to a life where work becomes optional. Among various passive income sources, such as rental real estate, royalties, or online businesses, dividend investing stands out because of its simplicity, accessibility, and historically proven effectiveness. Dividend-paying ETFs simplify this process even further by packaging a diversified group of dividend-generating companies into a single, easy-to-own asset. The result is a smooth, dependable stream of income that flows into your account every quarter and sometimes monthly, regardless of whether the stock market is soaring or stumbling. SCHD in particular has gained a reputation among investors as one of the most reliable and rewarding options in this space, a vehicle that quietly pays you, even when you do nothing at all. Welcome to WealthEchelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs, and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button, and don't forget to turn on the bell for updates on all our latest content. What makes SCHD a standout dividend ETF? For those who are new to the dividend ETF world, the question naturally arises: why SCHD? What makes this ETF different from the dozens of others on the market? The answer lies in its careful construction and uncompromising selection criteria. SCHD tracks the Dow Jones U.S. Dividend 100 Index, which includes 100 high-quality U.S. companies with strong dividend-paying histories. But SCHD is not merely about throwing the biggest names together. Its methodology is designed to seek out companies that demonstrate not only high yields, but also robust financial health, consistent profitability, and the ability to sustain and grow their dividends over time. One of the most attractive features of SCHD is its focus on dividend sustainability and growth, two qualities that protect investors from nasty surprises, such as dividend cuts during recessions. Companies included in SCHD's portfolio must pass strict tests of cash flow, debt levels, and return on equity. This ensures that the dividends are not only generous, but also likely to continue uninterrupted in the future. Another reason SCHD stands out is its low expense ratio of 0.06%, meaning only $6 is charged annually for every $10,000 invested. This low cost allows investors to keep more of their dividend income, unlike some actively managed funds that eat into profits with high fees. Moreover, the ETF pays a quarterly dividend, a frequency that suits both retirees looking for regular income and younger investors seeking to reinvest dividends to supercharge long-term compounding. With top holdings often including corporate giants like PepsiCo, Texas Instruments, Coca-Cola, and Verizon, SCHD is built on a sturdy foundation of companies that have weathered decades of economic cycles. These are businesses that have not only survived but thrived, and they willingly share their profits with shareholders every 3 months. How SCHD pays you while you sleep? The mechanics of dividend income. Many new investors wonder how an ETF like SCHD can literally pay them while they sleep. The mechanism is surprisingly simple and elegant. When you buy shares of SCHD, you are indirectly purchasing tiny ownership stakes in its 100 underlying companies. These businesses operate daily, selling products, managing services, and generating profits. As part of their corporate strategy, and as an incentive to attract and retain investors, these companies distribute a portion of their profits to shareholders in the form of dividends. SCHD collects these dividends across its portfolio and passes them on to you, the shareholder, typically on a quarterly basis. For example, in recent years, SCHD has offered a dividend yield hovering between 3.5% and 4% annually, which means that for every $10,000 invested, an investor can expect to receive between $350 and $400 per year in cash dividends, simply for holding the ETF. The beauty of this system is its consistency and automation. You do not need to watch the stock market daily, time your trades perfectly, or analyze quarterly earnings reports. Once you own SCHD, the income process runs on autopilot. The ETF managers handle rebalancing and adjusting the portfolio as necessary, ensuring that the fund continues to meet its criteria and deliver steady income. Even better, if you choose to reinvest these dividends, as many long-term investors do, your ownership stake in SCHD will grow over time, leading to compounding returns. This snowball effect can dramatically increase your wealth over decades, as each reinvested dollar buys you more shares, which in turn generate more dividends, and so on. The benefits of SCHD for both young and retired investors. One of SCHD's rare qualities is its broad appeal across generations of investors. Whether you are a 25-year-old building your first portfolio or a 65-year-old retiree looking for dependable income, SCHD can play a critical role in your financial plan. For younger investors with a long-time horizon, SCHD offers a powerful compounding engine. Reinvesting dividends can dramatically accelerate portfolio growth. Historically, dividend-paying stocks, especially those with growing dividends, have outperformed non-dividend stocks over multi-decade periods. By holding SCHD and reinvesting the quarterly payouts, young investors can harness this historical trend and let time and compounding work their magic. On the other hand, retirees or those approaching retirement appreciate SCHD for its steady, predictable income. The ETF delivers cash payouts that can help cover living expenses, supplement a Social Security, or reduce the need to sell assets during market downturns. Additionally, SCHD's high-quality selection process reduces the risk of dividend cuts, a crucial consideration for anyone relying on investment income to meet daily needs. Moreover, SCHD offers valuable inflation protection. Because many of its holdings regularly increase their dividend payments, the income from SCHD has the potential to grow over time, helping retirees keep pace with the rising cost of living. Another key benefit? Tax efficiency. Since SCHD primarily holds U.S. companies and qualifies for the lower dividend tax rate in taxable accounts, it may offer favorable tax treatment compared to other income-generating investments like bonds or real estate, which can be taxed at ordinary income rates. The risks and realities. Is SCHD too good to be true? As much as SCHD offers investors, no investment is entirely without risk. And understanding the potential downsides is critical to making an informed decision. First, while SCHD focuses on high-quality dividend-paying companies, it remains an equity-based investment, meaning its price can and will fluctuate with the broader stock market. During market corrections or recessions, the value of SCHD shares can decline, sometimes sharply. While dividends may continue to be paid during these periods, investors must be emotionally prepared for temporary drops in account value. Second, sector concentration risk is something to watch. SCHD tends to have heavy exposure to sectors like industrials, consumer staples, and financials, areas traditionally known for reliable dividends, but also for lagging growth compared to high-flying tech stocks. This sector tilt can lead to underperformance compared to broader indexes like the S&P 500 during certain market phases. Third, interest rate sensitivity could impact SCHD's performance. Dividend stocks sometimes behave like bond substitutes. When interest rates rise, their attractiveness relative to bonds can fall, pressuring their prices. In a rising rate environment, SCHD could experience headwinds even if the underlying businesses remain sound. Lastly, dividend cuts or suspensions, while rare for SCHD's carefully screened companies, are always possible. Economic shocks, unforeseen crises like the COVID-19 pandemic, or company-specific problems could force even strong firms to reduce or eliminate their dividends. However, it's important to put these risks into perspective. SCHD's built-in quality screen, diversification across 100 companies, and historical performance suggest that these risks are manageable, especially for investors who stay committed for the long term and view short-term market moves with calm patience. Can SCHD fund your financial freedom? In an era when millions dream of escaping the daily grind and achieving true financial independence, SCHD represents a realistic, achievable tool to help get there. Whether your goal is to retire early, cover your monthly expenses with passive income, or build generational wealth over decades, this ETF offers a rare blend of simplicity, reliability, and effectiveness. Of course, no investment, not even SCHD, is a guaranteed path to riches. But with discipline, patience, and time, SCHD has the potential to quietly build wealth in the background, all while paying you cold, hard cash every quarter, even as you sleep. This is the quiet, overlooked power of dividend ETFs, working tirelessly behind the scenes, funding your lifestyle, and steadily pushing you closer to financial freedom. SCHD may not make headlines like Tesla or Nvidia, but in the marathon of wealth building, it could quietly be one of the most dependable allies an investor can have. Thank you for watching Wealth Echelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.